$55 billion for Electronic Arts, the largest sponsor-led take-private in history. I am officially retiring my complaint that private equity has lost its nerve.
Oh, please, Nate. They formed a consortium with sovereign wealth just to stomach the check size. That is not nerve. That is passing the hat.
Passing a very large, very expensive hat. Look, Q1 volumes are up 43%. The Megadeal is fully back.
Sure, but so is massive geopolitical volatility. Let's see if this buyout momentum actually survives the spring. The rundown.
Wait, $10 billion for private jet parking? Apollo is buying Atlantic Aviation from KKR for $10 billion.
Fixed space operators are highly cash-generative monopolies, Nate. You know this.
I know, but $10 billion? KKR bought it for what? 4.8 a few years ago? That is an absolutely wild flip. I guess Apollo's partners just really want priority fueling at Teterboro.
I think they just looked at the Q1 data. Equity capital markets are up 43% year over year, $256.8 billion in issuance. The market is liquid and sponsors want massive deals right now.
Megadeal fever is definitely back. Case in point, Palo Alto Networks taking out CyberArk for $24.5 billion. That is a staggering number for a cybersecurity tie-up.
I read the press release twice looking for the catch, but I am highly skeptical this sails through smoothly. CyberArk is an Israeli firm, Palo Alto is massive. Regulators are going to have an absolute field day with this.
You think they block it?
I think they drag it out for 18 months, especially with the geopolitical volatility in the Middle East right now. Issuance windows are getting very complicated and oil prices are creeping up. Time kills deals.
I'm betting it closes, but you are right about the regulatory headache. Okay, let us pivot to snacks. McCormick and Unilever are smashing their food businesses together. $20 billion global flavor giant.
This one fascinated me.
Really, it feels like Unilever just desperately trying to offload their slow-growth grocery stuff. The company that makes Hellmann's mayonnaise is now running Old Bay seasoning.
Do not mess with Old Bay. But no, you are completely missing the structure here. It is a combination, not a straight dump. McCormick gets global distribution scale. Unilever gets to rebrand as a high-margin flavor house. It actually makes perfect strategic sense if you look at the margin profiles.
Spoken like someone who actually reads the footnotes on mayonnaise filings?
Someone has to do the reading, just like someone has to notice Carlyle taking a majority stake in MI Capital. $2.8 billion valuation for an RIA. Wealth management roll-ups are just unstoppable.
They are printing money. Same with Biogen picking up Apellis for $5.6 billion. $41 a share in cash for rare diseases. Good deal, but boring.
Boring pays out $41 a share in cash.
True, but nobody cares about a $5 billion pharma bolt-on when we have the largest sponsor-led take-private in history sitting right in front of us.
$55 billion for Electronic Arts.
Exactly. A sovereign wealth and private equity consortium is buying a video game giant, and the financing structure is wild. The big one. $256.8 billion.
Say it again, Nate. I know you want to.
$256.8 billion, a 43% jump year over year. The equity capital markets are absolutely on fire right now.
And yet, all anyone wants to talk about is one single transaction.
Because it's a monster. Electronic Arts, $55 billion, the largest sponsor-led take-private in history.
I read the press release 3 times just to make sure I didn't add an extra zero. $55 billion for a video game publisher.
A video game publisher with an absolute stranglehold on sports licensing and incredibly sticky recurring revenue? Come on. As a former banker, I look at EA's cash flow and I start drooling.
Gross.
You know what I mean. The microtransactions alone print money. It's the perfect private equity target.
Is it? Walk me through the exit, Nate. Who buys a $55 billion gaming company in 5 years?
Public markets or Microsoft or Sony?
Microsoft just spent 2 years fighting the FTC over Activision. You think regulators are going to let them buy EA next? Look at the Palo Alto Networks deal today. They're trying to buy CyberArk for $24.5 billion, and regulators are already circling that tie-up. big tech can't just buy whatever they want anymore.
Fair point on the regulatory pushback.
And the public markets? You need a massive IPO window for an asset this size. Plus, look at who's actually funding this EA deal. They call it a private equity consortium, but dig into the footnotes. It's heavily backed by sovereign wealth funds.
Sure, because nobody else has 55 billion lying around. You need sovereign money for these mega deals right now.
Right? But it completely changes the risk profile. Sovereign wealth funds have infinite patience. Traditional PE needs a 5-year exit. I think there's a real clash of timelines waiting to happen on the board.
I think you're overcomplicating it. They're buying an absolute cash machine. My old managing director used to say you don't need an exit strategy if the dividend pays your mortgage.
That is the most banker thing you've ever said.
Thank you. I wear it as a badge of honor. I spent half my associate years playing FIFA anyway, so I feel personally invested in this transaction.
Well, your FIFA addiction aside, the timing is fascinating. We have all these analysts hyping up the Q1 Megadeal boom. But then you look at the macro picture, escalating tensions in the Middle East, oil prices creeping up.
That's exactly why they're doing it now. Buyers are terrified the issuance window is going to slam shut. You strike while the iron is hot.
Or you panic buy before the geopolitical headwinds chill the market.
Maybe a bit of both. But speaking of striking while the iron is hot, EA isn't the only massive deal flying around the hangar today.
Literally flying.
Exactly. Rumors are swirling that Apollo is circling KKR's Atlantic Aviation for about $10 billion.
Private equity trading, private jets. You absolutely love to see it. How real are those whispers? Voices.
So the consensus from the street this morning is that Q1 was entirely defined by this flight to mega deals. Investors just want massive liquid transactions.
I read that note. They're looking at a quarter with $256.8 billion in volume and just slapping the word liquid on it.
You don't buy the liquidity narrative?
No, I think it's safety and size. If you're going to deploy capital right now, you buy Electronic Arts for $55 billion because you know exactly what the cash flow looks like. It's defensive.
Wait, a record-breaking sponsor take private is defensive? Oh, come on. That is peak banker hubris right there.
It absolutely is. Look at the other analyst warning today. Geopolitical volatility in the Middle East is escalating. Oil prices might stay elevated for a prolonged period. Buyers are terrified of the middle market because it's too exposed to supply chain shocks.
Sure, but you can't tell me Apollo circling Atlantic Aviation is a defensive play.
Oh, the private jet rumor.
$10 billion to buy private jet hangars from KKR? That's just billionaires trading luxury infrastructure. Nothing defensive about that.
Okay, fair point. But what about McCormick and Unilever?
The $20 billion flavor merger?
Exactly. They are literally consolidating the global spice rack. That's a pure margin protection play against inflation and elevated transport costs.
I guess when oil goes up, you really need to secure your supply of garlic powder.
You laugh, but it works. The market is ignoring the macro warnings as long as the targets are massive.
For now. But if you want to see where this mega deal momentum actually hits a wall, look at what Palo Alto Networks is trying to do.
$24.5 billion for CyberArk.
Right, and tomorrow we're going to look at exactly how much regulatory heat that tie-up is going to generate in Washington. Spill the tea. I'm just picturing the partner meetings on this one. Apollo buying Atlantic Aviation from KKR for $10 billion. Private equity guys arguing over who gets the better parking spot for their Gulfstream.
$10 billion for what is essentially a string of fancy gas stations for billionaires. I read that rumor and immediately checked my calendar to see if it was April Fool's.
Oh, come on, it's a brilliant infrastructure play. You have locked-in real estate at major airports, it prints cash. And you know the Apollo guys love an asset they can actually touch. Or in this case, fly out of Teterboro.
I don't hate the business model. I hate the price tag. $10 billion? With oil prices doing what they're doing right now? You're paying top-of-the-market multiples for a business entirely dependent on corporate travel budgets not getting slashed.
Corporate travel budgets are bulletproof when the CEO is the one traveling. But fine, you want a deal that actually impacts normal people? How about McCormick and Unilever quietly trying to build a $20 billion flavor cartel?
A flavor cartel. I actually love that framing. They're hammering out a merger of their food businesses.
I just want to know if my mayonnaise is going to start tasting like Old Bay.
Don't give them ideas. But seriously, 20 billion. It fits right into this whole Q1 Megadeal narrative. First, the massive Electronic Arts take private, now this. Analysts are saying investors only want these giant, highly liquid transactions right now.
Big deals feel safe. It's the classic banker mindset. If you're going to take a swing while the Middle East is this volatile, you take a massive swing.
But that geopolitical volatility is exactly why I think this megadeal window is closing. Escalating tensions, elevated oil prices. I'm looking at the Q2 pipeline and I see a freeze coming.
You think the music is stopping?
I think the regulators might stop it first. Tomorrow we're digging into the antitrust nightmare brewing for Palo Alto Networks and their $24.5 billion CyberArk deal. Plus, we'll see if Eli Lilly actually gets this Centessa acquisition across the finish line. Tomorrow's radar.
We're riding this Q1 megadeal high, but I'm sweating these Middle East headwinds. The Q2 window might just snap shut tomorrow.
Oh, come on. Snapshot? Apollo is circling Atlantic Aviation right now for $10 billion. You think private equity cares about macro headwinds when there are private jets to snatch from KKR?
Fair point. Classic sponsor flex.
Tomorrow my eyes are on the antitrust dockets for Palo Alto Networks and CyberArk. $24.5 billion. Zero chance regulators let a cyber deal that massive sail through.
Completely disagree. In this threat environment, national security overrides antitrust. They'll rubber stamp it.
Rubber stamp it? You really are a recovering banker.
I look at the narrative, which brings me to the $20 billion McCormick and Unilever rumor.
A global flavor monopoly. Imagine the pricing power on garlic powder.
Unstoppable. Hey, speaking of spicy valuations, we have to unpack Eli Lilly's $47 per share move on Centessa right after the break.